This is Andrew Stotz of A Stotz Investment Research to talk about India, which is the fastest growing economy in Asia and has strong fundamentals. When we look at countries, I look at four different boxes. Let's start with the box in the upper left-hand corner, which is GDP. And what we can see is that GDP at 7.56 is the fastest in Asia. Now, the components of GDP, the main one that we can see is the 6.52, which is private consumption. That domestic economy is doing very, very well. The laggard is exports, and India has never had a super strong export machine, but eventually I suspect that will come. Now let's continue on to the upper right-hand corner where we talk about the market overall. And what we can see is that earnings are expected to grow at the fastest pace in Asia. Analysts are expecting 14% in 2016 and 18% in 2017. Now, of course, that's good news, but my academic style research shows that be wary when analysts get super positive in an area. That's usually an indication that you could be in for a downfall. But if India can continue to produce good performance, then we shouldn't see a problem with the market. Now, profitability in terms of our ROE is well above the Asia average. So we're at about 15% on average. And of course, this is reflected in high valuation. You can't get profitable for cheap. It hasn't happened very often. Now let's move on to the bottom left-hand corner, which is my four elements, or what I call FVMR, fundamentals, valuation, momentum, and risk. And India comes off overall very, very strong. It's an attractive market. Fundamentals are great with ROE at about 15% in 2016 or 2006 to second quarter of 2016. And valuation is relatively expensive on both PE and price to book. Like we say, you can't get great for cheap. And momentum, relatively strong, both price and earnings momentum. And finally, risk. Beta is low, and I tend to like a low beta when it comes to investing. Now, let's move on to the bottom right-hand corner, and what we can see is sector performance. And the top three largest sectors are financials at 19% of the market, then tech at 12%, consumer discretionary at 12% also. The best sector in stock was materials, which was up 15%, and Monsanto India, which was up 39%. If we look at the worst sector in stock, you'll see telecoms was down 4%, and Bharti Infratel is down almost 15%. So there you have it on India. You want more? Well, you can get access to our additional research and articles, and also get your free membership and newsletter by just going to babinow.com. Become a better investor now.com/join.